Hello everybody, Steve Griffiths here, developer of the MTPredictor software program. Today I'd like to do a quick short video on the USE minis for new MTPredictor subscribers, just going through the last couple of days to show the analysis and the approach to take for the last couple of days. But first, let's have a look at our risk disclaimer. Just remind you that all examples in these videos should be considered as hypothetical. No trades are actually taken. They're just shown for illustration and training purposes only. Remind you there's a risk of loss in trading and investing. We'll be looking at a losing trade in today's video. And as such, it's important to understand, but more importantly accept that losses can and will and do unfold. Right, let's have a look using our add-ons for NinjaTrader 8. Sorry about that. Oops, let's just get the chart there, NinjaTrader 8. Right, so I'm just going to have a look at the ES in particular for the last couple of days, because it's very important to understand how to approach the trading. So just to remind you that MTPredictor is not a black box system. Okay, we don't just take all our setups 100% of the time based on our MTP trend color. We don't do that because the markets are random half the time. In other words, half the time you just can't get a good idea of where the markets are going. So half the time, or slightly more, you should be doing nothing. You should be waiting. That's what MTPredictor is about. In fact, that's what any trading system should be about. So how do we then gauge when the market's in a clear pattern and we then look to try and do our analysis? Well, for this we move to a time frame between 3 and 5 time frames higher. So if we're looking to trade on the ES, we'd probably be looking to trade on a 3-minute chart. So for this, we then go out to our 15-minute chart. If you're, say, trading Forex on, say, a slightly longer time frame, say on a 15-minute, you go out to an hourly chart. If you're, say, trading daily stocks, you go out to a weekly. What we do is then we place our DP levels on our chart. Now, these go on our chart in advance. I'm just going to put a bit of white space on the chart here. Just go back a couple of days. So I'm just going to scroll back a couple of days like this, and here can you see that we have a pivot low. If you want to know exactly which pivots to place our DPs on, there's a couple of recordings of our previous webinars in the customer section of the MTPredictor website that go over which pivots to use. Basically, they are the last swing into a high or low, or then the last major pivot high or low, as you can see on the chart. So here a couple of days ago, before the market even opened, you can see that there was an obvious swing pivot low there. Can you see that? So what you do is right mouse click, do DP. So what we're looking for is to see whether the market makes a reaction at this level. In other words, whether it is doing what we anticipate. We're not looking to have a market analyzer on our chart and then react to setups that come in the market analyzer like most systems, because that basically means you're behind the curve. In other words, it's very difficult to then go to a chart, place your analysis on and do all the stuff you need to do, because the markets move quite quickly. So we want to try and prepare you in advance. We want to try and get you ready for the kind of setups that you should be looking for. So can you see how this was on the chart in advance? So as the market then came into this last Thursday, you see it made a low at that level and then made a reversal. If we now go down to the 3-minute chart, we'll see what that looks like on the 3-minute chart. So I'll just scroll back. So this is what it looked like. The market came down, it then hit the low perfectly and then made a reversal. So what we deem from this is that because it's doing what we anticipate, the market is therefore in a clear picture. In other words, this is what we're looking to do. We're looking to see whether the market is reacting at our anticipated levels. If it's not, and the reversal is not a nice clear reversal at our level, then we deem the market's random and we stand aside. So here we'd either look for trade setups at this level. It might have been a DP or a VS setup, as we'll see that happened the next day, or the market trend then reverses up. Our MTP trend color is black. It will turn blue in a minute. As you move forward, you can see it turns blue. And here the market trend is now deemed to be up. It's now deemed to be up because we're coming off this nice reversal. So now we'd be looking for setups that fall in the direction of this new trend, i.e. up. The new trend is up, coming off support, therefore we'd be looking for buy setups. So we come along and there was a history triangle there. History triangles show setups that the market's gone beyond and would have been a setup at the time. Now this one wouldn't have been filled, I know, because I was watching it at the time, because the bar opened there, the next bar it went down, it went through the stop level first, therefore invalidating the setup before it went through the entry trigger, so there would be no setup on that history triangle bar there. We then got another setup, which was a TS1 setup. So now you'd right mouse click over the blue buy bar, you'd do analysis. This then gave you the position sizing with the target. You'll see where that is at the moment. You can't quite see it on because I've just moved the chart across a bit, but at the time it would be there. So this would have given you the position sizing, in other words, vary the number of lots, contracts or shares to keep your initial risk small and under control. We can vary this account size if we go to our control panel. We then go to Tools, MTPredictor, Settings, and in here underneath Accounts you can add in a new account. You can click New, you can then put the account title, you then put the balance, you then put the currency that is in as well. So you can just create some new accounts. So here we have a default one, $20,000 in or US dollars. I've also done a pound one, and I've done two smaller ones that we'll see in a moment for perhaps trading with the micros. So that then gives you the number of contracts to trade. You can see here this was quite a big risk on this trade setup, $338. So say if you're trading on a smaller account size, you'd have to go to the MES. So I'll just bring that up. Look, there it is. There's the MES. I'll place that 15-minute DP on the chart. Exactly the same. So there it is, coming at that low. I'll go back to the 3-minute chart just quickly. Come along here, and here you can see there's exactly the same setup. We'll just place our white space on the right hand side as well, just a little bit as well. There it is. There's our exact same setup. So if we right mouse click to analyze trade setup, here you get the number of different number of contracts depending on what you're trading. So if you're trading, say, a $10,000 account, it'll be going along 5 contracts. If you're, say, trading a $5,000 account, it'll be going along 2 contracts. Can you see that? Just put a bit more white space on there. Sorry, this needs to be a bit bigger, doesn't it? There we go. So various number of lots, contracts or shares depending on what size account. So if you do have a smaller account and perhaps you want to risk less than $100, you can see here that the risk would be less than $100, which is 2% of a $5,000 account. That would then calculate the number of the MES or the mini micro. I can never say that. Is it micro mini or mini micro? But you know the one I mean, the MES. So again, that keeps your initial risk small and under control. In fact, let's carry on this particular chart. You can see that was then taken in. The market then started to go up. It then reversed back down again, and it probably would have been stopped out with a loss. Maybe you'd have placed a break even. You might have moved the stop to break even because that pivot was at the swing. It was at the wave B swing just beyond there. Can't quite see this on the 3-minute chart. You'd probably have to go down to a 2-minute chart. No, it wouldn't have been so seen on that one. So it may well have been a losing trade, that one. You may have brought your stop to break even, but let's, as a worst case scenario, count that as a loss. Remember, losses can and will and do unfold. So that would be what we call a minus 1R loss as the market came down and then stopped you out. As it came into this low, you then had another trade setup come in. Let's take everything off. Again, this was a good trade setup because we were coming off this low. There's our 15-minute low. Our market trend is then up. Our MTP trend is blue, and you can see here the picture looks clean. So again, you'd have right mouse click, do analysis, and that would have given you another trade setup. Again, you can vary the number of lots, contracts or shares by depending on what account size that you are trading in. Let's stick on a small account to keep our risk less than $100. In this case, the market then rallied up nicely, went to our target where a profit of plus 2R was available. So that's what we're looking for. We're looking for overall to have trades that are large, but not just in dollars, but larger than the losses. So here the profit was plus 2R, the loss was minus 1R. So in other words, the profits were larger than losses. That's what moves your account forward. If you're slightly more experienced, you could have gone back to the higher time frame chart. Let's scroll back. So just as we place this DP support on, I now want to place a DP resistance on to get an idea of where the market might make a high. So again, we look at the last swing into the high or low. Do you see that there? There's the low. This is the last swing into the low. So you'd right mouse click over that pivot high. You've done decision point. Can you see how that's on the chart in advance? It's there before the market gets there. So when we go back to our 3-minute chart, can you see how now the picture looks quite nice? In other words, that's our resistance area. The market hasn't reached our resistance area. The MTP trend is blue, therefore the large degree trend is up. So what you could have done, if you're a more experienced user, is you could have looked to run that into that higher time frame chart, into the higher time frame resistance, which it would have done a bit later in the day, and that would have then increased the profit to plus 3.5R there. So that's what you would have done on that day. You wouldn't have taken that sell signal because we weren't at high time frame resistance. So that's it. Hopefully got an idea of what to do on that day. Let's see what happens the next day. So I'll just clear everything off. In fact, I'll keep on the MES, just clear everything. I'll go back to the higher time frame chart because that's what we do. So we do exactly the same approach. Let's clear everything off. Let's go back to before yesterday or Friday even opened. There was our position. So let's place some DPs on our chart. The first one to do would probably be right off this low here. Do you see that? There's the last main pivot low. So that would have been an area of support on our chart. We'd have used that because we'd have known that the market is probably going to gap down by looking at the 24-hour chart. By the way, this is a regular trading hours. So if I do data series, it's the CME regular trading hours, or RTH trading hours, which is what we tend to follow. So let's see what the market did. Well, it came down into this level. Do you see that? It had 2 attempts at this level. So when it was coming into this level, just like the previous day, the picture was starting to become clear. So if we now go back to the 3-minute chart, let's have a look and see what's happening here. Well, here we had a VS setup coming in at the support level. Our MTP trend had gone black, blue stroke black, so this was a good trade to set up to take. I think the VS signal would have actually come in on this bar here. So now we right mouse click, analyze trade setup. Again, we can look at our risk reward. In fact, actually on this bar, the risk reward was only 1.5, so that wouldn't have been less than 2. Wouldn't have been a good trade setup to take. In fact, I think it came in on this bar here. So let's place the. That's right, that's where it would have come in. So we place our analysis on the chart. Again, we use position sizing to vary the number of lots, contracts, or shares. So again, if we're looking at a small account with a risk less than $100, that's how many contracts you would have been trading. If you'd have been trading, say, the big account on the main contract, again, you could keep your initial risk under what level you wish. So let's see what happened now. The market took you in. It then reversed back down around again. Messed around a bit, came into a sell setup. You were past your 100% initial risk level. Maybe you'd have taken your stop to break even at this level because this was a VS setup. VS setups normally go with us very quickly, don't they? This is what we've described in prior trading. So you'd have probably brought your stop to break even. If not, the market then messed around, and then came down and then would have stopped you out. So this would have either been a break even or, at worst case, let's say another minus 1R. Let's take a worst case scenario. But I think in reality you'd have had your stop to break even by now because all of this messing around here, we know that VS setups should go with us very quickly because they are with the professional money. Let's clear everything off. The market then goes down. It then does another VS buy setup here at our level. So again, let's place the analysis on. 2 contracts to keep our initial risk small under control. This time the market then goes up ever so slightly and then comes down pretty much straight away and again would have stopped you out. So that again would have been a minus 1R loss. So this is why I'm doing this video, to show you that losses come through. It's important to understand that there always will be losing trades no matter how good the picture is. And this is the important point, that losses can and will and do unfold. But the important point is keeping these losses small, at what we call minus 1R, or 1 risk unit. Then another buy setup came in. This was a DP buy. Can you see this at the bottom here on that blue buy bar? So this was again still valid because we were at high time frame support. In fact, actually, if I place the DP off that low, it would have come in what I call double DP support here as well. I just want to take that off because it confuses things. But the setup is still valid, so we right mouse click. We then do Analyze Trade Setup, and again that will give you the number of contracts to trade with our target at that level. In this case, the market then went straight to the level. Do you see that? It took you in there very, very nicely. It went straight to the level, but this is the important point. Here the profit was plus 4.6. So I'll put down plus 4.6 R. In other words, it was 4.6 or 4.5 times greater than the losses. This is the whole trick to trading. In other words, when you're wrong, you keep the losses small at minus 1R, but when you're right, you keep the profits large, not just in dollar levels, but in risk units. If I go back to the standard size, the normal ES, just do exactly the same analysis on that, and have a look at the profit on the last trade there. Just clear everything off, put that higher time frame DP off there. Can you see how that DP would have caught the low? This is what we're looking for. We're looking to only trade when the markets make reversals at our DP levels. In other words, when the picture becomes clear. At other times, we sit there and do nothing. So I'll just place the analysis on there, and you see how this was a very good trade setup on our default account. So risking $325, it would have brought a profit of $1,500 in. In other words, 4.5, just over 4.5 times R. So let's count this up over the last couple of days. So at a worst case scenario, we would have had minus 1R, then we had plus 2R. And again, a worst case scenario, we had minus 1R, then minus 1R, and plus 4.6. So we had 5 trades, of which 3 were losses and 4 were profits. So let's add that up. 4.6 plus 2 minus 1 minus 1 minus 1, minus 3 that is, overall comes to plus 3.6 R profit. So that's even without having those two losses at break-evens. If there'd have been break-even trades, which you probably would have been if you're more experienced, that would have increased the profit even more. But for this video, I want to show that as a worst-case scenario. So overall, even though you had more losing trades than profits, i.e. 3 losses and 2 profits, because the profits were large, that's what made you money overall. And that's what MTPredictor is all about, is keeping the losses small and keeping the profits large, and looking to run the profits into your targets to make them large. In particular, this trade setup here we saw the other day is that rather than having the 2R profit, if we'd gone into the higher time frame target, wasn't it? It was off here. Then that would have increased the profit still further. Just putting our DPs back on again and go back to that trade yesterday. So it would have been off this trade setup here, wouldn't it? Looking to run it into the higher time frame, so that would have increased the profit again by an extra 1.5R up to 3.5 from 2. So this is what we're looking to do. And can you see how that would have actually been in the trade for quite a long time? In other words, it takes time for trade setups to unfold. If you're worried about this little pullback here yesterday, it's not yesterday, the day before, if you actually look at the 5-minute chart, you can see that pullback did actually unfold as a lovely TS3 buy setup. So that came in here and actually gave you another opportunity to go into another long trade to take advantage as the market rallied up on that correction. So that's important to understand, that markets will go against you while you're in a trade. There will be these times when you get consolidations and slight declines. You have to sit through these and give the market time to work out its profit. In other words, the market needs time to then get to these higher levels, and that's important. So hopefully this video has been helpful for you and actually shown you how to actually analyze the markets over the last couple of days in a bit more detail, and in particular only show you how to trade when the picture's clear. In other words, we place our DPs, our high time frame DPs on the chart. They're on the chart in advance. They're there ready for you to see would the market react at those levels. In other words, is the market doing what we anticipate? If it's not, the market is deemed to be random, and therefore you stand aside or look to another time frame or market combination. But if the market is doing what we anticipate, i.e. reversing off our projected DP levels, then we deem the market pattern is clear, and then we can look to gauge the large degree trend direction in that correct direction off those DP support and resistance. We then look to find trade setups that unfold either at those levels or are reversing or coming off those levels like they did here with our MTP trend color. Then we deem the picture's clear, and then we can look to trade in that direction. And even though there will be losing trades, we're looking to have trades where the profits are large in relation to the losses. So over time we have losses, but those losses are kept small at -1R, but we have profits where the profits are large in relation to the losses. And that's the whole idea of MTPredictor. So hopefully this video has been helpful to give you an overview of particularly trading the ES over the last 2 days.